All right, let's dive into India's Union Budget for 2026-27. Every year, this document basically lays out the financial roadmap for, over a billion people. This time around, it's a really interesting story of big spending, a laser focus on youth, and maybe most importantly for you, some key changes that are going to affect your wallet. So let's break down what this blueprint for India's economy is all about. Right off the bat, the whole budget is built around this one core idea, Yuva Shakti. That literally translates to youth power. And look, this isn't just some catchy slogan. It's the lens they're using for pretty much every single decision, whether it's building new roads or investing in tech. It's a huge signal that the main focus here is on growth, new opportunities, and making sure India's next generation is included. Okay, so before we jump into all the cool new projects and policies, we've got to look under the hood, right? Check the engine room. Just how healthy are the country's finances? Because this economic snapshot, well, it's the foundation that everything else is built on. So you're going to hear this term fiscal deficit thrown around a ton. But what does it actually mean? Well, to put it simply, it's the gap between what the government brings in and what it spends. Think of it just like your own household budget. A smaller gap is always a good thing. It's a sign of really strong financial health. And here's the number for this year. The fiscal deficit is projected to be 4.3% of GDP. And GDP is just, the total value of everything produced in the country. So why should you care about this 4.3%? Well, it's a big deal, because a lower number like this basically shouts to global investors that India is managing its money responsibly. And that's absolutely crucial for long-term stability. And it's not just that. Here's another key health check for the economy, the debt-to-GDP ratio. It's down to 55.6%. Now, this number just measures the country's total debt compared to its total economic output. And trust me, seeing this number go down is a fantastic sign. It means the country's finances are getting more stable and, really importantly, more sustainable. So all that financial stability we just talked about, that's what unlocks this number. Public capital spending, that's government spending on big projects, is getting a massive boost to 12.2 lakh crore rupees. I mean, that's 12.2 trillion. This is not just some figure on a spreadsheet. This is the actual money being pumped into building the country's future. We're talking roads, railways, ports, the stuff that's going to drive growth for decades to come. So with a solid economic foundation in place, the big question is, where is all that money going? Well, that brings us to our next section, which is all about building tomorrow's India. We're talking about huge investments in the industry and infrastructure that are really going to define the nation's future. The budget is making two huge bets on where India's industry is headed. First up, there's something called Biopharma Shakti. It's a 10,000 crore rupee fund aimed at cranking up our domestic medicine production, which means we'll rely less on imports. Then, there's an SME growth fund for the exact same amount. The whole idea here is to find those promising small businesses and help them scale up to become the giants of tomorrow. And a huge part of this is about moving people and products around faster and cheaper. The budget is laying out a massive plan for new high-speed rail corridors to connect major cities. Plus, there are these dedicated freight corridors, which are basically super highways for trains, just to get goods to market way more efficiently. And they're also expanding national waterways, which is a really smart, cost-effective move to take some of the pressure off our crowded roads and railways. But look, steel and concrete are only half the story, right? A nation's greatest asset is always its people. And that brings us right back to that core theme we started with, Yuva Shakti. So let's look at how this budget is investing directly in the health, the skills, and the well-being of its citizens. And this chart here gives you a really great bird's-eye view. The investment isn't just focused on one thing. It's what you'd call a holistic 360-degree approach. You can see there's a huge focus on education and skills, to get the youth ready for the jobs of the future. Then there's health, dedicated support for farmers, and even a big push for sports. And when you dig into the details, you find some really cool targeted investments. For instance, they're setting up these AVGC labs in thousands of schools to build skills in animation, visual effects, and gaming. Super important stuff. There's also a brand new campus to expand access to mental health care. And they're even rolling out AI tools to give farmers smarter, data-driven advice. You see, each one of these is a really direct, strategic investment in people. Okay, so we've covered the big picture, the economy, the nation. Now let's bring it right down to the personal level. How does all of this actually affect your wallet, your taxes, and your everyday finances? This is the part you've probably been waiting for. All right, here's a simple change, but it's a very welcome one for pretty much every taxpayer out there. The deadline to revise your income tax return, it's been extended. It used to be December 31st. Now you've got all the way until March 31st of the next year. It just gives everyone a little more breathing room to get their filings right. Okay, let's run through a few more key changes that might affect you. If you're spending money overseas for things like travel or education, the tax collected at the source has been dropped to just 2%. Bringing personal stuff back from abroad, the duty on that has been literally cut in half. This is a big one. 17 essential medicines are now completely duty-free. And to help push green tech, key materials for things like lithium batteries and solar panels are getting some nice tax breaks. Now, for those of you who trade on the stock market, there's a specific change to know about. The Securities Transaction Tax, or STT, on futures contracts is going up a bit. Now, it's a tiny percentage increase, but the idea is to just slightly raise the cost of short-term trading in that one specific part of the market. Okay, so after looking at the economy, all the big investments, and the changes to your personal taxes, what's the bottom line here? What's the main story this budget is trying to tell? What's the big takeaway? It really boils down to these four main pillars. First, keep the economy strong and disciplined. Second, use that strength to build some truly world-class, future-ready infrastructure. Third, and this might be the most important one, empower the youth with skills and opportunities. And finally, just make the whole tax system simpler and a bit more user-friendly for all of us. And that leaves us with one final thought, really. This budget has a very clear vision. Pair these massive infrastructure projects with a really deep investment in people. The huge question is, will this dual focus, building things and building people, will it turn out to be the right blueprint for India's next decade of growth? That's definitely the story we'll all be watching.